The US economy just posted one of the weakest job growth numbers in nearly 4 years. In August, the non-farm payroll report showed only 22,000 jobs created. The US has shifted from one of the hottest job markets in 2021 and 2022 to now barely adding jobs at all. This slowdown pushes the labor market closer to a tipping point, where jobs growth could actually turn negative, and history shows that's often a breaking point for the economy. Going back to the 1980s, when payrolls fell below zero, a recession often soon followed, like here in 2020, 2008, 2001, and 1990. But today, despite these slow job numbers, Wall Street doesn't seem worried. The stock market keeps climbing to record highs, and corporate profits still look strong. To many investors, that signals the economy is still resilient. So, does the stock market know something we don't? To really understand this disconnect, we need to look beneath the headline non-farm payroll numbers. These job figures are being revised down at a record pace, and in 2025, those revisions have erased over 460,000 jobs from the initial reports. The May jobs figure was cut by 125,000, and for June, the initial gain was reduced by 160,000. These revisions means fewer people are being hired than first reported, and it also means the labor market may be softer than initially expected, pointing to a slowing economy. If we zoom out, we can see that downward revisions like this are outliers. In fact, the two previous times we had such big revisions in employment was during COVID and prior to the 2008 recession. If we look at 2008, we can see that payroll numbers were revised down month after month. The unemployment rate doubled from 5% to 10% in just 18 months, and the result was one of the deepest economic downturns in decades, with stocks crashing more than 50%. Today, unemployment is still just 4.3%, and while it has risen from its lows in 2023, it remains well within historical norms. But with job growth slowing so sharply, the risk is that businesses may not hire enough to absorb new workers. Over time, that pressure could push the unemployment rate higher.